What's up, everybody? Welcome back to Royal Blu FX. All right, we're going to start talking about the second part one. Excuse me, actually, let me just start again. Hey, what's up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about part two of how to trade news. Now, this system utilizes, or this theory utilizes the supply and demand theory. Okay, so the previous video on part one, which I'll link up somewhere around the corner on the left or right here, is about trading the breakout of news. Okay, but in this one, we're just going to trade supply and demand. So theoretically, the way this looks like, it's sort of like this essentially. When you're seeing prices go on a higher high, for example, if my thing works here, hold on one second, higher high, just like this. Why am I getting a single click here? Okay, something like that, right? If we're doing this, something like that, right? And say, for example, news just starts from this high here, so you get higher highs, higher lows, right? Break of structures, right? And let's just say news is about to retrace now. News just opens up and it starts to run, right? Well, obviously, the evident next low would be to buy from the demand zone, right? Because this is the next low, the low that broke the high, right? So this is where we're going to look to buy. And essentially, price will come and mitigate this demand zone and then trail back up in this case, in this fashion. Right now, it doesn't happen like this all the time, because there are other times when price actually, let's just say, sweeps liquidity, right? It could be maybe like a sweeps liquidity like this, right? Maybe like a triple high, a triple top, or a double high, a double top, excuse me. And then you'll see price like this, right? It's always a supply. It's always a supply and demand zone, right? Just like that. Take out liquidity like this, right? So let's just say news just started opening up from here, right? And price just starts running, right? Well, it's going to your supply zone, obviously, and you're going to be entering from there, going bearish, right? So it's a little easier said than done, obviously, but I'm going to show you guys on the live chart example and show you how this works, because this is probably the most safest way to do news, obviously. Obviously, the video prior to this one on part one, which was trading the breakouts, is a little bit different, obviously. And it's not, it can be the safest, it can be a safe way to trade. However, if you do what I was teaching on the previous video, then you shouldn't go any wrong with your trading. Obviously, there's no what is it, a safe haven for every type of strategy. But however, if you follow the rules, everything should be pretty simple and easy to trade. Here, okay, so let's look over here, for example. In this example here, you can see that news, I'm going to go back here, and in order to backtest this, you need to go actually on your calendar. So click the calendar, always go at 8:30 a.m. And by the way, your timeline here, the timeline should be at New York 8:30, because 8:30 is when news runs, right? If you guys watched the previous video. So you guys go on the calendar, go to every first Friday of every month, okay, at 8:30 a.m. And we just press go here. You can see where price actually shows us where price ran down right here. So you can see this impulsive area pushing bearish is the news, right? So let's just say if we were to, do all our structure mapping like this, right? And you can see how price is moving bullish like this, right? We can pay attention to before price gets to, before the news opens up, before news opens up. So let me just kind of click this out here. My mouse is kind of being a little funky today, so apologize if it's not working as fast as I would like it to. Anyway, so I would do my structure mapping, right? I would see that there's breaks of structure. There's my swing low, swing high, swing low, swing high, right? And then all I'm anticipating now is where's price going to be running to, and where am I going to be buying and or selling from based on where price is. So in this case, you can see also vice versa, we have a break of structure here, right? We have a swing high to a swing low down here. So one thing I want to do is see, okay, if I'm here now, there's my internal swing high, my internal swing low, swing high right here, right, to swing low. I would anticipate that this is where price should sell next, right? So that's my supply zone. Now, a lot of the way to trade this news again is really just mapping out your structure and your supply and demand zones. Just be as very simple and clean with your charts. Don't be marking everything out like, okay, going on lower time frames from 30-minute all the way down to the 1 minute, saying, okay, well, this is a breaker structure, that is a supply demand zone there, right? And, all this stuff. You don't want to overcomplexify this strategy. So again, you just mark out your breaker structures, your highs and lows, right? Your supply and demand zones, and wait for price to get there. So in this case, as you can see, we had an internal breaker structure right here. All right there. And then you can also see that we had another internal one in there that started from the very high. Actually, we can just call that a chalk because it is a chalk right there. Okay. And so, in fact, we can even go a little further from here. We have another one right there. Okay, so the real chalk, so because price is fractal, and I'm not going to go into explaining why price is fractal and whatnot, but just understand the theory and my examples here. Whenever you see a break of structure, always refer to the high that broke the low, right? And it was this high. So in this case, what we're going to do here is wait for the news to show and see what happens, right? So let's play it. Boom. Okay, we know that this was our next demand zone here, right there, right? So then I would mark this out, right? And I would mark it on a 30-minute. Now you can do either or, okay? You can either mark your demand zone on the 30-minute and then just do what I did, use your 50% fib, and then only enter from the 50%, right? 50 EQ right here, okay? And the reason for that is because what you're doing is you're limiting your risk to a very small percentage, right? You're not trying to over risk, you're not trying to enter from the top of the zone, but you're actually trying to enter from the 50 EQ, right? And a lot of times price just gives you what you want in terms of the 50% EQ. Price does actually come back to the 50 EQ a lot of the times. So you could just do this, right? So let's say price drop, right? And then here we go, we strike and we continue and you tap the next high, right? Now, again, it's easier said than done because the way price works is based on supply and demand. That's what we trade, supply and demand and PLT PHTs. You can see here, this is a PLT because we have an impulse retracement impulse right here. So that is a PLT right there. So we anticipate the PLT for the PLT to also be swept as well. Okay, on the opposite side, on the sell side here, you can see we have a swing high, swing low. We have a PLT here. That's your PLT, or PHT, excuse me. That's your PHT, right? And then we wait for price to come and tap the order block and then sell off at the same time. So I'm going to explain on the third video. I will explain the third way to trade news as well. But this is one of my favorites, the way I do this way. Okay, so let's go to the next example. Let's go to the next month on a Friday. Remember the Friday at 8:30 a.m. New York time. All right, right here you can see a clean sweep bearish here. Let me just kind of pinpoint that again. Go back to that 8:30. It's this big candle right here that's pushing bullish right there. Okay, there we go. I'm going to mark it in red so you guys can see it right there. I'm going to expand it out just a bit, right? Again, do you guys see that, right? That candle that pushes bullish. Now, before all that happens, again, I want to anticipate and mark out all my supply and demand structure. So from here, we can see that we have a clean break right there, right? That's one, right? And we can also look at the opposite side as well. You can see that we had a break here as well. You can also see that we had some liquidity sweep from the highs right here, right there, right? And we can kind of zoom out a little bit and see what's happening here. You can see that price actually hit a flip from here. So this is a flip right there. Let's do that as supply zone. So we have that mitigated already. Took out liquidity. Supply zone was tapped, right? And then from here, we can look for a sell because we see that the major structure was broken, right? The major was here, you can see it. And then you have internal structure right here and here, right? This is all internal, high, low, high, low, high, low, right? That's internal. Then you have the main break of structure. So once we do this, right? We want to make sure to see, okay, well, where's our next, where was price mitigated, right? We can see that here, from this low to this, from this high to this low, price was mitigated just right there, right? Right there, that's your demand zone. All right, so now what's next? Now we want to see where is price, since we're anticipating for price to go bearish because this is the higher time frame, you can see high to low, right? We want to be selling. And you can do either or, to be honest, but in this case, I'd be more cautious not to buy or sell against the trend. You should go with the trend, obviously, because that's where the most weight is held. Okay, so let's do some market structure here. So now we want to see, okay, well, where's our supply, right? Again, we see a multiple structure going bearish. You can see it here. You can see there's a break of structure there, right there from that wick from this low to this high. That's your chalk right there, right? And then now you can see from this break, you have an internal, another break structure down to the downside here. That's our BOS, right? You want to mark out everything, and the reason for this is because, again, it'll be much easier for the eye to catch where the next move is going to go, where it's going to run, and where it's going to continue from, okay? So there we go. You can see we have another break here. So this is another chalk. Okay, right there. All right, now that I see everything else, now that I see all the breaks and the chalks, right, now I got to see where my supply and demand zones are. So right here off the bat, we can see that we do have a flip from here, right there, right? This is the flip. Actually, I'll just put this as a gray zone because that is the sell supply zone. So we can do one of two things. We can either expand this buy to sell here as the supply zone, or we can see off the bat already that this low here mitigated this supply zone there, which also makes this high now as the next supply. All right, and then off the bat again, you guys can see the flip in there. All right, we're going to expand that to the left. All right, and this is where we're anticipating for prices to drop. Okay, so we're expecting a sell, and we're also expecting a buy at the same time. Now, I'm actually anticipating if prices, one of two things can happen here. Let me delete this here. One of two things can happen here. This is what you're looking at, okay? When I look at this, I'm always thinking to myself, okay, price can either drop on the demand zone, or price can drop, start running from here, running bullish, right? This is actually a sweep of liquidity, so that we can actually put that as a sweep. It is a break of structure, right? But once price mitigates the demand zone, like so, right, we look for this as a sweep of liquidity, the last low, and price, we want price to run up. So let's look at this, right? Here is your order block right there, right? And now we're anticipating for price to drop, either mitigate this demand zone and buy from, or we're looking just to sell it on the major structure because we know we're bearish on the higher time frame. So let's continue, right? Let's look at this together. All right, boom, right? Look at that. It barely even comes down to this demand zone, right? Doesn't even, it just induces us, right? So if you were on, say, a 30-minute, right, you can either enter from the 30-minute, or you can enter on the probably the 3-minute, as I like to go on the lower time frame sometimes, just to see what is happening. Now, actually, I do see this. Let me just go in here and show you guys. This candle here that breaks above this high is considered to be a breaker block, which means I could have actually just done this. So in theory, or in reality too, I would have actually entered this bullish. Then we can see price going bearish. Now, the idea here isn't to catch price moving as soon as news opens. The idea is to catch it after the news opens. Okay, so I'm going to talk about on part 3 of how to trade news. You're going to see how I'm trying to catch news while it's opening. There's the before, the middle, and the after. So what I'm showing you right now is the after effect of news. Okay, not before or in the middle. The part 1, the video yesterday or 2 days ago that I recorded, is the middle effect. Okay, the middle effect is when price is running either bullish or bearish, right? You guys can recall if we're on a 1 minute right now, right, we put a stop loss, buy stop there and a sell stop here, and you wait for prices to run the high quickly, right? And then you make your profits bullish here, and you make your profits bearish, because I can see right there price opened up and it manipulated us. So you would have been able to catch some profits at the low here and profits at the high, right? So you have two TPs, two profits essentially. All right, let's continue. So here, right, I would have been waiting here patiently for this entry as well, and then just target the low here, right? You don't want to be too greedy, obviously, when news comes out, because news can be wild sometimes. It can start manipulating you in a bunch of ways. There you go. So you would have hit TP right there. Again, why are we trading from the supply zone? Because again, we have a major supply zone that was mitigated right there, and we are naturally just looking for price to go bearish from here, as price should, right? So again, mark all your structures, right, and all your supply and demand zones, and wait for price to reach your supply or demand zone from that point of view, and then continue. Now, this is the after effect news, right? Everything you're seeing that price is going bearish like this, it's the after effect news. The first candle that runs up is when news opens, okay? And then all of a sudden, this is the after effect. So you can get, yeah, you can get either or, but right now we're talking about the after effect news right now. So you can hit this obviously for a safer TP, right? It's still it's more than enough. You got 6.1%. Obviously you can hold it all the way down here, because we do have a swing high to a swing low, which we'd want for price to obviously reach down at bottom. Now, that doesn't mean you should always do this, obviously, because sometimes this is what happens and you don't want to be in a trade more than you should be, right? Let's continue to the next one. So we're going to go to the third example. Okay, let's go another one backwards. Friday, right, 8:30. Let's go. All right, so quickly off the bat, you can see right here, this is that candle right there that pushes bullish right here. Okay, right there. And this, I'm going to mark it here in red. That is news that just released, right? So we're going to take this out. And now we're going to do our supply and demand again, right? Just do our structure the way we always should. Okay, so now we see that we have a small break above right there. There's your chalk, right? Because it did take out the high right there. Just right there. Now, not every break of structure is going to be a sort of a, a chalk or, anticipating that price should start reversing bullish like this, because obviously not every first break of structure or from the going the opposite way means that price is going to go the other way, right? If that was the case, then this would be too easy, right? So this could also be this is actually indeed a liquidity sweep, which we can talk about later on another video from now. All right here you can see a break of structure happening here. You see two. There's one. Right, one break here and a second break here. So this is a chalk right there. All right, and right here we can see that we have the flip again. Let's go right there. Supply to demand zone right there, right? All right, and then what I'm also seeing here is the main break right there. This is the main break. This high here is internal to this main high here. So I do see a buy to sell here again as well. It didn't quite tap. I don't like it, but because you can see all that imbalance in there. Now you don't have to mark out all the imbalance. Just mark out what you can see, right? Your supply and demand. There's your FFG there, right there. So there's a likelihood that price can reach up here because price goes to major structure, okay, and it wants to go and mitigate major structure. So if I'm looking at this as a main high, main low, main high, main low, right, swing high, swing low, then I am more intact into looking to sell from this position here. Okay, so let's look internally. Here we see that there's internal structure. We see below, swing high. We had a break of structure there, which is our chalk actually right there. And then we can see another break of structure here. Price came and mitigated this low. So then we know we have, this is the next demand zone to buy from, right? Right there, that's your last order block. In fact, if I wanted to refine this, I can go all the way down here, but sometimes with refining, even on the higher time frame, it can be a little bad because the order block may not tap sometimes, but you can see both. You can see that this is also a breaker block as well from here. Okay, so which also means that price actually already tapped right there. You see that? So you can see the solid body close above the wick, right? That just ran above the wick. This is a breaker. So, and I do that. I just do this sometimes. I just put a BB for breaker, right? And this would be my main demand zone. So, I want the after effect. So let me just delete this here. I want the after effect. I want to know if price is going to leave here, where is it going to bounce off from next, right? So we have our supply zone. There's two options actually, this one and this one right there. So I see this as a supply zone. So sometimes you'll get two, most of the times you'll just get one. That's because when we have a breaker structure here, right, we're anticipating for price to run up, right, chalk. On the higher time frame, this can be a major demand zone as well, which I'm not looking at obviously, but I can right now just for everybody's, for this video obviously, right here. So we are on a demand zone right there, boom. So we are anticipating for price to reverse up. See, that little bit of information would help us a lot to understand what is price going to do from this point. Now we can understand fully to say, okay, well this is actually a clean chalk. That is a chalk, confirmed chalk, which means prices should move bullish here. So let's continue from here. A lot of times we have what's called a random low. We say RL for random low right there. Price will sweep out the random low because prices, and also if you look at this, price hasn't actually even mitigated the demand zone either. So we could do this. We mark out the random low, right, and we wait for prices to come in again if prices are going to go bullish from here. Now again, this is the this is not the after effect. This is the beginning, right, before price opens. But just to show you guys what happens here, look, boom, right. Notice how price took out the random low right there. Took out that random low, right. And now you can just run it all the way up to this high. But now we're going to look to ping pong everything from here. Okay, price reaches this high, done deal, right. This was all news right here. And then now we can look for prices to reverse. Now you can either start selling. Now I'm going to tell you guys something. Because we broke this chalk, I'm going to actually delete this, and the only reason why is because we're on a demand zone, on a major demand zone. So technically this supply zone here is gone. I'm not looking to trade from there anymore. I'm looking to trade from this supply zone right now. So I can actually hold it from here, and I'm anticipating for this high to fail. So let's continue here. Okay, price reacting. Okay, we can also buy from here, but I'm waiting for the after effect. Let's see what happens. All right, it's kind of funny. It actually reacted from this area, which is fine because, you know, the interesting thing about is when you're trading, prices do react from supply zones when you're going bullish, so no biggie on that. Let's continue here. Right, I'm still waiting for the after effect because I'm looking at everything on the higher time frame. And this did actually go bearish, didn't it? Okay, well, there we go. I make mistakes too sometimes, as you can see. So this was actually a supply zone that I could have been interested in. Right, boom. Okay, let's continue here. I'm pretty sure it should run up all the way up. But if it not, oh well. Oh, there you go, guys. There we go. It tapped, filled the imbalance, tapped the order block nicely, right? So that would have been the entry as well from here to down here. At minimum at this low. However, we did break this, right? We want to be mindful of this huge demand zone down here. But anyway, you guys get the picture, right? Let's see. Okay. Anyway, guys, I hope you guys understood this video, right? Understood how the news works on supply and demand, and just marking out your breaker structures, guys. It's all the same thing. Structure is all the same way, right? You just need to be able to map out structure correctly and understand the theory behind news, understand the movements behind news, understand essentially what price does on a day-to-day basis, right? It prints the same thing over and over. So this is what I would have done if you ask me, right? All right, guys, until then, I will see you in the next video. Thank you for watching, and please leave a comment, obviously, and let me know what you guys think about this this theory, and if you have any questions, I'll be happy to answer. Until then, guys, I'll see you next.